The real estate market here in the Reno-Sparks area has been changing rapidly. We've seen interest rates rise, which has put some downward pressure on prices. We see more homes coming on the market, but what does that mean if you're thinking about selling your home? What about buying it? Is it a good time to buy a home? Well, we're going to answer those questions and a whole lot more on this episode of the quick Reno-Sparks real estate market update, this time for September 2022.
Assist you sell way smarter.
A couple of items of note before we dive into all the stats and figures and charts. And that is, this is for the Reno-Sparks area only. Metro includes all the way out to like Spanish Springs and south to East Lake and Verdi Mogul and all the way out to the foothills of Sparks. So this whole corridor does not include Minden, Carson City, Gardnerville, Dayton, Fernley, Fallon, Burlington, etc. Now, if you do have a home in those areas or you'd like more information on the real estate market out in those areas, hit us up down below in the comments, or if you're on Facebook, you can write a comment over there as well, and we'd be happy to get to that information. I mentioned this is for September 2022, but these are actually sales figures and stats through the end of August, because as I'm filming this and recording this, it is early September. Now, if you want more specifics on your individual property, you can go over to our website at forrenohomes.com, and right down here in the center of the screen, click on Find Out Now, and you can enter your home address. We'll send you a computer-generated value right away, and we'll follow that up with a more detailed report on the value of the property that you're selling, or maybe even thinking about buying. So make sure you take advantage of that free service, no cost, no obligation, and it'll give you a really good rundown. But let's dive into the overall market. And the first thing we look at every episode is interest rates. Obviously been following these closely because it's had the biggest impact on our market over the last 6 to 9 months. And as you can see, interest rates are on the rise. Now, first part of the year, we were right around 3, slightly over, slightly under. They were fluctuating, and then boom, they turned around and over doubled in a matter of 6 to 7 months. Now, we did see them peak out really in May, June at around the 6, slightly over. They started to soften a bit down, and they almost touched 5, maybe lower 5s. Now we're starting to see them rise back up into the upper 5s, low 6s once again. Now, what do I expect going forward in interest rates? Probably right around this area here. We'll start to see, you can see normally we start to see the interest rates bracket a bit, meaning they kind of hit a high, hit a low, hit a high, and they kind of bounce around between. I think we're going to dance around between low 5s and upper 5s, maybe low 6s in that range for probably the next 6 months to a year. Now, obviously, a lot of things can happen to affect the interest rates, but that's what I expect. Speaking of expectations, the median home price, I do expect them to continue to soften a bit. We're actually seeing the median home price in August was $565,686. Now, that's down from a peak of $615 back in May. So we're down 50-something thousand dollars. We're down quite a bit, so about 7-8%. We're down 1.5% from last month, but a number that you hear a lot in the media, and maybe even on a bunch of websites and stuff, is say, well, home prices have softened and inventory has gone up, but we're still up. Well, yes, we're still up year over year. So just a quick quick information on these stats that you're seeing on your screen. When it says prior period, that means the previous month. So in this case, we're talking about August 2022. Prior period would be July of 2022. When it says same period last year, obviously it's from August of last year of 2021. So technically, when people say prices are still up, they're correct from last year. However, if you look at prices this year, they're actually down, right? So it really depends on the time frame you're looking at. But we are, regardless of how you want to look at it, we are down from our peak at 615, 565. I do expect this to potentially fall a little bit further, maybe to the 530, 540 range, before we probably see it level out a bit. And we'll have to see what happens next year with interest rates and the economy and so on. But I do expect some continued softening in prices. Now let's look at the active listings on the market. Now, these are homes that just are currently on the market for sale, meaning you can go out today, you can go look at them, you can potentially purchase them. These are ready homes on the market, ready to sell. And you can see here a significant rise. We're at 1,298, just shy of 1,300 homes on the market, which is down actually 8.1% from last month, but is up 117.4% from last year. And as we've mentioned a number of times before, this number looks significant and it's kind of a shocking number, but it shouldn't be, because if you look back at, we're up 117% from historically low levels of homes on the market. And if you actually look at this chart, and I like to go back historically, and this way this one goes all the way back a decade, basically to 2012, you can see a normal active inventory of homes on the market is between 1,000 roughly and 1,400. You'll see some fluctuations in there, but if you can see, we've rebounded. We're right here in the normal range. Homes on the market by price: active homes 4 to 5, 5 to 6, 6 to 750 is where the bulk of inventory is. Now let's look at closed properties. Now these are homes that actually sold. They went on the market as new, then they were active, and then they got an offer on them, they went into escrow, and they actually sold. So these are sold, closed homes. You can see here, normal would be considered about, 500, 550 to about 650 is kind of where you would see. Now, this goes up and down because we have fluctuations in our market, of course. November, December, January, winter months, holidays, etc., you have a very low level of number of sales and inventory and so on. And then as spring hits, you see more people put the homes on the market. Sales follow shortly after until things slow down a bit. So that's what you see here. What concerns me a bit is that we're starting to see, this is one of the lowest peaks in total sales that we've seen in the last decade. Back here, but this is really in the winter months. This is the summer. Normally, so we got summer, 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 summer. I keep going down the list. So as far as a summer peak, this is one of the lowest ones. Now, we are seeing a little bit of a rebound. We're up 1.9%. So I'm anxious to see what happens with the sales through really September, October into November to see if we get a little bit of a pop in sales. But overall, sales are going to be down from previous years. We're sitting at 437 sales, again, 1.9% up from last month, but down 22.2% from this time last year. And if you look at closed by price, not a huge shock here. Most homes are selling between 4 and 5, 5 to 6, and 6 to 7 is the bulk of sales. Now let's look at new listings. Now a lot of people say, what is the difference between new listings and active listings? New listings are just listings that came on the market in the month of August. Doesn't mean a lot of these listings could be sold. They may be active now and still on the market, but these are just the number of listings taken. And this, again, is rebounded to a nice normal level. We're actually down 15.8% from last month at 596. Again, not at all uncommon for July, August. It tends to slow down a bit. Down 20%, though, from last year where it was 747. But you can see if I go back all the way back to 2012, we had about 650, and it falls. And you can see this is really the end of the year into December, January, before peaking back up. Spring, winter, spring, winter, spring, winter, and so on. So we're right in the normal level as far as the number of new listings. A lot of people think, well, I'm seeing all these listings and these signs. It's no more than normal. It's not like we're seeing a flood of homes come on the market. We're really getting back to more normal level. It's just we didn't see a lot of yard signs. Things didn't sit on the market very long for the last couple of years. So it does seem a little bit out of the ordinary, but it's very much within what would be expected for this time of year. Now, if you look at new listings by price range, again, not a huge surprise here. 4 to 5, 5 to 6, 6 to 7, and so on. This is where it gets interesting for me, is months of inventory on the market. This is actually a really good thing. I think to have a strong, stable market, usually around 2.5, 3 to maybe 4 months is considered a very sort of strong, stable, good market. Prices are moving up slowly, but buyers have plenty to look for. Sellers can usually get their home sold within a few months, depending on the competition in neighborhoods and so on. So we like to see about 3 or 4 months. That's a real strong, stable market. So we're at that point now. If you look, really 2 to 3, 3.5 is kind of the normal bracket in here, and we're right at that range. But where it does get interesting is you look at inventory, the months of inventory by price. We are firmly in a buyer's market in the 1.5 million plus. There is 10 plus months of inventory. We're really reaching that point at the 1 to 1.5 million. We're right at 5 months plus. That's going to be rising here shortly. So anything 1 million plus, you're already starting to enter that buyer zone range, buyer market zone, where you have plenty to choose from. Sellers are probably going to have to get more aggressive on pricing. But as you get below that, really the 750 to 900, you're looking at about 3.5, almost 4 months. So right, strong, stable, but we're still very much, if you look at the 3 to 4, 4 to 5, 5 to 6 range in here, we're only at 2 to 3 months. That's still very much a seller's market. That's still usually indicative of strong appreciation, quick home sales, and so on. And here's another thing that's got my attention. This is unsold listings. Now, these are homes that came on the market. We went over, obviously, new listings. We went over the actives. These are the ones that went through that new and active process and never sold. So they expired, they got taken off the market, etc. Up 32.3% from last month, up 203.4% from last year. Speaking of buying or selling a home, if you are interested in selling your home, come over to our website, forrenohomes.com, and check it out. We are Assist to Sell. We've been in the market here in Reno. We actually started right here in Reno in 1987. We've sold thousands of homes and saved homeowners millions upon millions of dollars over the years. There's no reason to pay a huge commission to get your home sold. We'll list and sell your home for only 1%. If your home is under $400,000, it's only $39.95, $3,995. So great value. We are a full-service company. We show your house, advertise your house. We do absolutely everything. Our expert agents will meet with you, determine what makes the most sense for your situations. Don't hesitate to reach out. We'll see you next month on the Reno-Sparks Real Estate Market Update. So long.
Assist to sell way smarter.